Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. Today we're going to break down, and I can't believe we haven't done this until now, trading rules. But before we start, make sure to smash that like button, share, and do subscribe. All right, so this is so simple. I don't even think I need to elaborate more than just giving you an example. If I'm from Senegal and I learn how to play basketball on a certain rule that is just for Senegal, and I meet Canada in the Olympics and they have a separate rules of how you play basketball, well, guess what? We're not playing the same sport. We're maybe playing basketball, but we're not on the same rule book, and it's going to create chaos. Well, the same thing is with trading as well. It's very simple, okay? Whether you're trading commodities, futures, if you're trading stocks, if you're trading options, the same set of rules apply across the board. That's why it's so essential and so basic to know these rules, all right? Now, I'm going to go through them, and these are the rules, but hang on, okay? Because I want to digress in each one, and I want to really elaborate on each one, and I think it's super, super important. And number one, the trend is your friend. You don't want to fight the trend. How many times have we found ourselves where the market is doing one thing and we're doing the opposite, and we continue to do the opposite? You know what it's like? It's like we're speaking and we're communicating on two different languages, right? The market is telling me one thing, and I'm doing the opposite of what the market is telling me, and we're not communicating. And guess who's not communicating? It's not the market. The market communicates. It's us who are responding or anticipating in the market that are not really communicating with the market. So number one, the trend is your friend. Number two, you don't want to fight the tape, which means, okay, this is a little bit different than number one, where if you're in an up market, you're in an uptrend, yeah, the market's going to go down a little bit, but you want to buy those dips. You don't want to chase it down. You don't want to be a hero and say, okay, I'm going to be the guy who shorts it at the top of the move, and as soon as it gets back to its lower level or lower higher level, right, I'm going to cover that short, I'm going to buy it again. Don't do that. Just play one side. And what that means is in the dips, you want to go and look to buy again. Okay, so if something is uptrending, you want to buy it, and then when it dips back down, you want to buy it again, okay, as it's trending up higher. Now you do the opposite on the opposite side of the market. On downtrends, you want to short the bounces, okay? The greater probability of the plays is to short it, right? Because it's going down. So yeah, you'll make a quarter, but you had an opportunity to make $1, right? That's what you're giving up. Number three, don't add to losing trades. This is a horrible habit, both in the moment and 9 times out of the 10, it's never successful. In the one time it is successful, you've convinced yourself that it's not such a bad habit. That's even the ramifications that are much worse than just doing it in the moment and losing more money, because you're going to try and do it again and again and again. And you're going to rationalize to yourself. Don't do that. Let your profits run and cut your losses. I used to have a big sticker on my computer, and I'm talking about 25 years ago, is that I used to let my profits not run long enough. And it's really a hesitation in the markets. It's kind of like double guessing yourself that you're not fully right in the trade, right? And I want to avoid that, okay? You want to build that confidence in yourself that you did the right thing in the market, right? Number four, all right? Use protective stops and limit losses. This is so important, right? This is so, so important. You need to play a little bit offensive, but remember you're defensive. You got to go sometimes into defensive to make sure the other team doesn't score. Plan your trades and trade your plan. Don't listen to other people. Don't base it on other perspectives. You know, if you fail to plan, you plan to fail. That was one of our mottos on the desk as well. And that's super, super important because you're trading your plan that you want to recreate success. And the only way to do that is to trade your plan. And the last one, don't trade impulsively. Trade your plan always, 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 always. This is really a very, very difficult thing to overcome because we're so impulsive, because the markets happen so fast and we don't want to lose out on the opportunity, and we want to make sure that we're in the game, but don't do it. Don't do it. Hold yourself off, because 9 times out of 10, again, you're usually not right, right? And even if you are right, guess what? You've developed another bad habit. So these are the rules of trading that are across the board, no matter what you're trading. Take them, write them down, use them, and most importantly, trade responsibly. Thank you.